Hello, everybody. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 20th, 2022. And Bitcoin, as well as the rest of the cryptocurrency markets, are gearing up for a big move. Many believe it's going to be down, but I'm here to tell you it's going to be up. And it's highly likely that that's the case, and I'm going to show you why using pure price action. If that interests you, then watch until the very end. Getting started on the small time frames. Remember that there's no bias towards a large or small time frame. All are equally valid. It really depends what you're doing. If you're scalping, you need those small time frames, obviously, to trade intraday. But if you're trying to reduce your risk and make high probability reads and trades and ladder into positions, you want to read high time frames, right? But in this video, what we're going to do, we're going to look at the 15-minute time frame as well as the daily time frame, because I want to show you a fractal or a repeating pattern that's happening. And if you're subscribed to the channel, you'll know I'm most likely looking at a reversal pattern. And essentially, any good chartist is able to identify one thing and one thing only, a reversal pattern, right? It's because it's after those reversal patterns that impulses happen either up or down, and that's what you want to trade, right? You don't want to trade chop, you don't want to trade consolidation, but you want to be able to read and decipher consolidation reversal patterns to know what's likely the next move. So right here, I've got this descending, expanding wedge, whatever you want to call it. And in this range, we've got Bitcoin printing 2 degrees of reversal consolidation, okay? And so we're coming off a large drawdown, 7%, 8% drawdown, I don't know what it was, but we fell from the 24K range down to the 22,000 range, down even to the 21,000, okay? And this candle right here is showing you that that drawdown is exhausted. Sellers are exhausted in that move. Okay, that is your initial break of structure. That's what you want to look for. My Wyckoff people know exactly what this means. What do they call it? The automatic reaction, I think it's called in Wyckoff. It's abbreviated AR. But essentially, right, the market shows you that there are no more sellers here, and buyers stepped in immediately. So right on that move, you got price jumping almost 4%, right, within that 15-minute candle, right? So much so that you couldn't even print another candle. It's within 15 minutes that it reached that point, the low of, or that point of 21.4, and then automatically jumped back up to 22.1. Okay, so this is the beginning of your consolidation reversal pattern, right? And in Elliott wave theory, we call that an A wave, or initial break of structure. So every A wave has a corresponding B wave. So we've got this A wave, right? I call this big A. You'll know it's a 3-wave structure. It's corrective. And the corresponding B wave makes an even lower low, and this is common. So we have a 1, 2, 3 wave move here. That's your B wave, okay? And it's a zigzag, right? You have a WXY, right? If you want to be really technical, you see that 1, 2, 3, 1, 2, 3 in the middle, and then 1, 2, 3 to end it. And that is the end of that B wave right there. Okay. So we've got a big A and a big B. Okay. So we know that these consolidation reversal patterns necessitate 2 degrees of AB basing, as Ralph Nelson Elliott called it. So that's your first degree right here. Let's just label big B, and then we'll do a 1, all right? And that ended right here. And then the second degree happens right here. So let's make this bigger just so you can see it. And guys, if you're getting value, please like, share, and subscribe. Right here, you start on your second degree, and you go 1, 2, 3. Do you see that? So that's your second A wave, and I call that small a on this channel. And then your second B wave, you've got a flat correction, which goes 1, 2, 3. Do you see that? So you've got 2 degrees of A-B basing on the small time frames. So you can expect for the next move to be up, right? And as soon as you break this resistance right here at what is it, at 21.3 thereabouts, expect an explosive move to the upside, right? Because you can see, if you want to draw your sort of lines, your diagonal lines of support and resistance, right there is a resistance with multiple data points, right? You have about 3 data points, and the more data points you have, the more reliable the line or the region of support and resistance. So expect price to move from here. This is a quintessential um, consolidation reversal pattern, okay? And it's a bit slanted, but at the end of the day, what you're getting is an inverse head and shoulders. You see that right there. And this is the neckline. Do you see that? And right there is the nexus point of not only this neckline of this inverse head and shoulders, but also this resistance that I just drew in right there. So that's a double resistance that you're going to be breaking at around 21.2, 21.3, okay? And as you know, the measured move of that break will be the height of this this descending wedge, which is something like this, yeah, superimposed from the side of breakout, which should put you at around 22.3, okay? And before you get some more consolidation, okay? Now, people who are bearish believe that, okay, you may get some slight move to the upside, but you're not necessarily going to get much. It's just going to be a small move to the upside, followed by consolidation and more downtrend. I'm here to tell you that that is highly unlikely, and here is why. First and foremost, if you read price action, you're price action literate, you know that this is uncommon for just a regular intra-wave consolidation. Now, obviously, consolidation reversal patterns, you see them intra-wave as well. That isn't uncommon. But what's uncommon is the degree to which you see it in this wave. What do I mean by that? If you zoom out, remember, in any wave, you're likely to get proportional corrections to the impulse. So if you have an impulse that starts down here, okay? And this is a consolidation, this is your impulse, this is consolidation, this is your impulse, and you've exhausted the trend, then you put in another consolidation. If you count 5 waves, which we do, 1, 2, 3, 4, 5. Remember, we said that this was an ending diagonal with an extended 5th wave. If you get a consolidation at the end, understand that that is likely to be a reversal, okay? That's likely to be a reversal, because if you were to get an intra-wave consolidation, it would likely be much larger than these consolidation intra-wave. Does that make sense? Think about this. Anything intra-wave will have to be smaller than the larger kind of higher degree consolidation. The higher degree consolidation would have to be massive for this to be a continuation down, right? And it still could be that this is part of a complex correction, and this is just an intra-wave move, and then you get some more price action like so, and then you continue your downtrend. But that's unlikely because we have other assets like EOS that have already started moving in that direction and breaking trend with a consolidation reversal of the same degree of what you saw intra-wave. I know this is getting really technical and kind of wonky, but this is what you come here for, right? A lot of other channels, they really don't scratch the surface, and they don't talk price action because not many people can read price action. So you're likely to hear about indicators and what the 200 MA is doing and all that stuff. You can get that elsewhere, and we can look at indicators. But for the time that we have together, I'd rather just talk about price action because I know you're not going to really get that elsewhere. So that's my read on that move. Now, I want to look at the higher time frames because I want to show you a fractal, and we can do this in other assets as well, right? If the time permits. But you can see here, you have your 2 degrees of consolidation reversal, right? Right here. So you got your 3 waves move and then your 3 wave move. That's your big A, that's your big B. You've got your 3 wave move here. That's small a, and this is small b right here. So basically you got 2 degrees of consolidation reversal. You are respecting this important support line or support range around 21K. Okay, so this is basically this last small b was a retracement, a 3-wave retracement like so, that had an A wave, a B wave, and your final capitulative sort of impulsive C wave. And you're ending up here, you're doing consolidation reversal that we saw on the 15-minute time frame, which is why I'm saying the next big move is likely to not only retest that 24K region, but then finally break it. Why? Because we have our 2 degrees of consolidation reversal, big A, big B, small b, okay? And on the smaller time frames, as we just saw on the 15-minute time frame, you have a complete 2 degrees of consolidation reversal that should take you up and out of this region. What am I looking for? For confirmation. If you can, if there's such a thing, okay? We all know that that is quite subjective, but if you take your Fibonacci retracement tool from the top of this drawdown to the bottom, what you want to do, if you want to kind of confirm or tell yourself it's high probability that we're not only just moving up intra-wave and consolidating for further drawdown, but we're actually going to break this drawdown, is breaking the 618, which is right now at 23.5, which is at 23.5. The 618 of this drawdown is at 23.5. If price breaks 23.5 with significant on a significant time frame and closes a candle above 23.5, consider this read, this entire read, as confirmed as can be, okay? Because we all know confirmation is tough to make. Now, we've talked about Bitcoin. This is what I'm seeing. That's why I'm seeing it. We can see the same things throughout the market. Crypto is correlated. You don't need to look outside of the cryptocurrency market to really see patterns. Let's go down really quickly. We can see in Litecoin the same thing. You have 2 degrees of consolidation reversal. From this low, you got your automatic reaction, or your A wave, as we call it in Elliott wave theory. This is your first wave. This is your wave 2. So big A, big B. This is the daily time frame, okay? And then we're going to jump into the 15-minute time frame and see the same exact thing. So we have wave 1, or small a, right? So this is a 3-wave move. This is kind of it's very hard to it's unambiguous. That's the word I'm looking for. And then here you have 1, 2, 3 waves. Again, a nice even flat correction for small b. There are your 2 degrees of consolidation reversal. Now, zooming in to this portion, you should see something similar. And here you see at the end of the day, what does it look like? It looks like, once more, an inverse head and shoulders. We all know that no pattern has 100% hit rate. But, just looking on Investopedia or anywhere else, you want to do your research on these patterns, that 70% of the time, 75% of the time, even, these patterns break to the upside. So this is very, very likely. Obviously, if we break down from here, then this pattern breaks. But if we break up even a little bit, it's likely to confirm an Obviously, the confirmation of these head and shoulders is a break of the neckline, which would be around $70 for Litecoin. But you can see the same thing. Now, zooming into the 15-minute time frame, let's see if we can't see the same patterns as we saw on the daily time frame. Okay, and once again, you can see you have your automatic reaction or A wave right here. Okay, you have your corresponding B wave. That is, let's see. Sorry, I'm just trying to make heads and tails of this. Okay, yeah, that's my B wave. So this is my big A, this is my big B. And my small A is right here, 1, 2, 3. You see that? And then small b is quite large relative to small a. So you have 1, 2, 3. Okay, and you have a 5-wave move here. And we all know that all impulses, need 5 waves, and you read 5 waves and you can see the completion. And also, if you look at volumes, you should see a capitulative volume candle. All right, you saw the same thing in Bitcoin. You have your capitulative volume candle on the big move down yesterday to show the end or exhaustion of that drawdown. Okay, this is how you use indicators, and we're just using price action here. Price action is primary. Remember, all indicators are derived from price action, so you can try to get away with just reading indicators, but at the end of the day, if you really want to know what's going on and with no lag, learn to read price action. So, and then use indicators corroboratively. So that's what we're doing here. We use volume corroboratively, and the volume also says that the trend is exhausted here as well as here. Do you see that right there? You see a capitulative volume candle here? That corresponds to this impulsive move right here. Do you see? And then if you turn on your EMAs, you should see a lot of confluence, right? But again, if you know how to read price action, you don't need to get lost in the morass of indicators, right? Because indicators are based off of price action, my friend. So learn to read price action. Take the time. It's, challenging, but if you learn how to do it, you'll thank yourself, because indicators will make much more sense and you'll know how to use them even more effectively. So anyway, you get your 2 degrees of consolidation reversal here. Big A, big B, small a, small b. This is small b. Whoops. 1, 2, 3. Small b is completed. Expect that to happen on an even smaller time frame, just like we zoomed out, right? On the daily time frame, we zoomed in on the 15-minute time frame. We saw this consolidation reversal pattern, 2 degrees, right? You can go on the minute time frame and see that same thing happening in there. That's why it's taking time, and that's the beauty of price action. That's the beauty of math, right? It's all fractal. It's happening on a smaller and a smaller and smaller and smaller time frame until it's imperceptible, but it's happening nonetheless. Okay, and then when it finally happens, I don't know to what point, but at a certain point it breaks out, and that's your breakout. Okay, so again, just like in Litecoin, just like in Bitcoin, the next big move is up, and if we breach a let's see, the 618 of this move would be the 618 of this move, right? Let's take the Fibonacci retracement level of this drawdown from here, and let's take it from the technical low. That's a nominal low. This is the technical low, which Prechter calls the what does he call it? Damn it, I don't have enough time, but there's a name for it, and I say it every other day on this channel. Okay, and so my 618, my golden ratio is at $61 for Litecoin. So if $61 is breached, closed on a high enough time frame, you know that this read is confirmed. Okay, and you can do the same analysis throughout the market. Okay, that's what I'm looking at. That's why I'm looking at it, guys. I think it is a bear trap, because all of this price action to the downside is minimal with respect to what we've done so far. Yes, this is 17% drawdown, for instance, in Litecoin, but that is considering we've gone up much more since the nominal low, right, in June. Okay, so that's it from me, guys. Like, share, and subscribe. Have a great Saturday, and I'll see you tomorrow. Bye.
Wreaking havoc on their drums. We cold, getting dumb, getting crazy style. Late night, high division, we be moving with precision. With 10 spots popping off, making some decision about hitting them one at a time with these ill rhymes. My love at the door, free drinks hitting the floor.